Hi, Ron. It's Stuart here again from a very miserable and grey England town today. Went to a football match last night. First live football match I've been to for a long time. It was a great night under the floodlights. Very nice, very exciting, good fun. Unfortunately, we only drew, but we're still top of the league, so it's the most important thing. Right, my dear trading friends, we are going to do our October giveaway raffle. I hope you can see the our roulette wheel of fortune here. Our very own proptrade.com rule wheel of fortune roulette wheel. I can't say that very well. But anyway, let's make it a bit bigger and make me a bit smaller because that's always good fun, isn't it? There we are. I don't see my big nosy head there. Right. I've got my colleagues in the wings as well. They're going to take a note of who's the winners, because all I've got here is the wheel and a number. So I'm going to spin it 10 times and reel out the number, and my colleagues are going to let me know who's the winning ticket. Obviously, we're here for the ADP data as well, which comes out in 15 minutes time, but we'll have all that done before then. So we are ready to go. I'm hoping somebody's typing away. In fact, it's the boss. Oh, so I better be on best behaviour because the boss is watching today. So, right, okay, let's go. Let's go, my friends. Right, first one up. Remember, we got 10, so I better make a note here, physical note. I've got 10 fingers, but I always so I don't mess up. Don't put too many in. Right, okay, first one, let's go. Are we okay, everyone? Yes, I've got thumbs up that we go. Right, so let's click away. So I'm going to make a note of this as well, just the numbers 1330. Okay, hopefully we'll get a name for that, or should I just do them all? Let's do them all. So 1330 is the first one. So we close that and we go again. Oh, it's a bit quicker this time. There we go. Love the turn. It's tick, 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 tick. First winner was from India. You're our first winner, and the second one is 883. Close. Right, 2 down, 8 to go. Best of luck, everyone. Here we go. Oh, that's gone even quicker, isn't it? I love our corporate green. It's a very fitting colour. I saw somebody running in a vest this colour yesterday. 1279, my friends. Kuram was second winner from the United States. Third winner is 1279. So third one. So we'll close that. Shall I wait for the third? The bronze. It's not the bronze medalist, is he or she? It's just the third winner. So let's go for number 4. It was Janak from India. Janak from India was our third winner. Number 1279. Number 4, 40% of the way through. It's like coming to the end of April when you're trading the year. 762. 762 is our number 4, nearly halfway through. So we're coming to the end of June. So 4 is 762. Let's close that. Go again. So we go a bit faster this time. Oh, it's going backwards. And we have our 5th winner. We're halfway through, my friends. Number 5 is number 243. 243. I'm getting applause in my ears. I don't know if you guys are as well. So I've got 1, 2, 3, 4, 5 winners, and our 5th winner is residing in Canada. It's Gavisha. Gavisha is in Canada. So we got a winner from India, a winner from the US, a second winner from India, and a 4th winner from Canada. Number 5 was number 243. So just close that. And number 5 is also from India. It's DJ from India. So we got 3 winners from India, 1 from the US, and 1 from Canada. So we're into the second half of the draw, number 6 of 10. Best of luck, guys. Remember, we've all got A 10k account. 10 of you to win the October giveaway raffle for October the 1st. It's a big holiday in many countries today. 751 is number 6. 751. 751. My notebook has just dropped on the floor. Did you hear that? Make a great big crack. So 751 is winner number 6. Number 7, 70% of the way through. Jatin. Oh, Jatin. I hope it's my friend Jatin who joins us on the webinar. Jatin from India is our 6th winner. Number 7 is 197. I like that number, 197. It's one of those numbers. 97. Everything was £97 or 97 pence in the early days of e-marketing, so that people didn't have to pay, £100. They paid 97, not 99, but 97. It's that combination. People think lucky 7. So Jetin is our number 6 winner at 751, and 197 is our 7th winner. Is that right? Yeah, 5, 6, 7, 197. So we close 197. Issei is also from India, so we've had India's doing really well here. Indian colleagues, 1, 2, 3, 4, 5 of the 7 are Indian colleagues. So let's go again for number 8. Drink of water. Seems to have gone slow again, doesn't it? You see it ticking round. Number 8 is 190. 190. So 197 last time, 190 this time. Our highest number has been 1279, 1,279. So 190 is our 8th winner. Is it going to be another trader from India? We'll see in a minute. 9, our penultimate winner of our $10,000 account giveaway is 93. Another 9, 93. So we've had 197, 190, and now 93. Number 8 was somebody from the United States. Savion from the United States was number 8. We are now number 9, which is 93. And finally, fingers crossed, everybody who's still hoping for a free account. Last chance. Number 10. Let's just close that. And we go again. So 93 was our 9th winner. And our final winner today is the number 1083. 1083. So it's another 3 on the end. So 110,083 is our final winner. So congratulations, everybody that's been a winner today. We'll be doing these giveaways again, I'm pretty sure of that. Our number 9 winner was from the United Arab Emirates, the UAE, Marazufal. So congratulations to you, my friend. Savion, Aseb, Jatin, Vishay, Keshra, excuse me for my pronunciation. Janak, Karam, Vikrant was our first guy out of the box. And our 10th winner is 1083. And I'll just wait for the name to come through. Let's just close that. And we'll get on. We've still got 5 or 7 or so minutes before the data comes out. Our final and ultimate last winner is Philemon from Kenya. Congratulations. So we've got winners from India, the United States, Canada, the United Arab Emirates, and finally, the great continent of Africa is represented by Kenya. Congratulations, Philemon. Congratulations, everybody. Do keep in touch. Keep on our Discord group, obviously, for any updates. And we'll have some new competitions in the near future, I'm sure. Very exciting month ahead of us. We're very excited about October. We're celebrating our first birthday this month. So keep your ears and eyes posted to our Discord group. If you're not on Discord, it's a very simple chat bot. Get it on your phone, on your tablet, on your PC, or whatever, however you used to keep in touch. But thank you, everyone, and let's just crack on with the work in progress. Thank you, boss. Thank you, everyone back at headquarters, and let's have a look at the markets this morning. What's happening? I'm just going to close that down. What's happening today? So Actually, let's go back to yesterday before we crack on with today's news. Obviously, yesterday we had that the Chicago PMI is a bit weaker, the consumer confidence slipping, and the job openings actually rising a bit better than I expected. So we had this mixed bag of data, which we seem to have had as far as the United States is concerned. Obviously, the big news overnight out of the United States is the federal government in shutdown. It sort of fits Trump's mantra with regard to trying to lay people off, and you can't blame him. People see the still things still happen with some departments closed down or some departments running on a thin headcount. It's so he wins both ways, I think, from this point of view. He tried to negotiate. He'd say we've saved money by these shutdowns. Whether we get whether this impacts non-farm payroll data, the Bureau of Labor Statistics on Friday, and there's been I haven't seen any news about that, whether it's actually coming out or not, but you would expect it to perhaps again, I don't know whether politically he'd want to hold that back if it's a good number or a bad number. You want to get rid of it or something. We'll see. We'll see what happens over the next few days. His speech yesterday was indeed all about the big news was about Pfizer cutting prices to US. That was sold in the press conference to US consumers. So prices of pharmaceuticals and medicines, particularly some of them, coming down very, very significantly, according to the administration. What it's like in reality, again, the devil is always in the details as ever, but that was a big win for the pharmaceutical industry in general. So to sort of relieve this idea of unknown or how big the tariffs may be. So some pharmaceutical companies rose, particularly Pfizer. They were up about 2 or 3%, I think, yesterday at one point. I don't think they closed that well because the market sort of obviously saw the concerns over the shutdown. Normally, the market sort of rubs that off, and then the stock market. I'm talking about, when I say the markets, I mean the stock markets. They all closed positively yesterday and rose into the close, which is always quite a positive state. But I can't remember how much Pfizer closed up. 6.8%. So it was a very, very significant day. So it's finished strongly. Pfizer biggest day in decades. I used to work with Pfizer at the beginning of the century, all 25 years ago, in the UK, and fascinating company, but very, very strong day. So 6% rise in one day. That's obviously best day since certainly since COVID. So we'll see. No problem. So yeah, that was the big announcement yesterday. So we had a relatively strong close for the stock markets. Dollar remains pressured, and everyone's favourite asset is at all-time high. So this is the pounds, the guppy. We'll come back to that in a minute. But just before we get the data in 2 minutes, I posted this earlier on our on the on Discord group. The gold chart at all-time highs again today, so 3884. Come off a wee bit in the last couple of hours, but new all-time highs here this morning. That's well, you can see around about there. The top of the Bollinger Band now sits at 3895, so 3900 also in play. I've lost all my lines, haven't I? No, I don't want to copy. I just want to open it. I've had it on my other chart, but I don't. Dreadlocker's just messing me about all the time. But anyway, there we are. All-time highs there. That's the 4-hour chart, or the VWAP and the ATR. But let's go back to the Bollinger Band stochastics, which we are looking at. So we'll see. So gold all-time high. So today's calendar, ADP is the key data. We're looking at about 50,000. If we just go back to today, come along. So as I say, it's 1st of October. It's a holiday in many parts of the world. China, Hong Kong closed. Many other parts of the world, and all my colleagues and friends in Cyprus Independence Day today. Data of note this morning has been the continuing weakness in manufacturing, particularly the UK. Look at that, 46.2. for the Standard & Poor's PMI index for the United Kingdom, 46.2. We had some finally had some positive data out of the UK yesterday. Seemed to be picking up, but that manufacturing is still in the doldrums. Remember, anything under 50 for the PMI data, the Purchasing Managers Index. Remember, these are the guys that work obviously for the in the manufacturing sector, that source equipment, source orders. They put it all together, so it's a forward-looking indicator. And you can see here the Italian data, the French data, the German data, Euro-wide data, and the UK. All of it still in contraction. 46.2. Britain sitting at the bottom of the pile, and Germany starting to tick up a wee bit. This was down at 35, 34 a few years ago. German manufacturing very much in the doldrums, starting to sort of show some signs of recovery, particularly with this big fiscal recalibration in Germany this year, and the focus on defence spending. But obviously, all of that has got to get through. So, yeah, the story remains the same. A little bit of positivity. Some of these numbers green and a little bit better than expected. But as you can see, France had crawled into expansion. Now it's into contraction. Italy had crawled over the 50 last month, and now it's gone down. So, and similarly, the Eurozone number gone back down into a contraction number. So inflation remaining sticky, in line with expectations at 2.3%, better than many parts of the world, but still, 2.2% is still 2.3 of 1% above where the central bank wants to be. Nothing's going to change Miss Lagarde's mantra on that. Still looking for further rate cuts possibly this year. And ADP. Notoriously disconnected from non-farm payrolls for the last few years. It's got a bit more credibility now. Remember, ADP is a private payroll company, and these are private payrolls, so not government numbers. So 52,000 from 54,000, very, very sort of small numbers from the 200,000 plus we've been seeing. But this recalibration we saw last month or so, in the jobs situation in the United States. The focus of the Fed is now looking at the job situation, but although the numbers have come down quite significantly, is it having an impact on corporate profitability? Is it having an impact on corporate earnings? We should start to find out again in a couple of weeks for the third quarter, when the third quarter numbers start coming through. Is it having an impact on people's pockets, on businesses' pockets? It doesn't seem to be the case. We don't seem to have had that bite in the inflation number, although inflation, CPI, CPE last month, all still remains on the sticky side. So, but we haven't had the lift up many were expecting from the tariff. But then the flip side of that is, well, the tariff argument hasn't really started to bite yet. But as Trump said, I think earlier this week, tariff is his fifth favorite word. And he talked a lot about it again yesterday, trying to repatriate pharmaceutical jobs, pharmaceutical investment into the United States, and certainly some of the big UK ones, for instance, GSK, GlaxoSmithKline, and I've forgotten the name of the other one. The other big UK pharmaceutical company talking about big investments in the US rather than the UK. So situation there. So ADP in the next few minutes. In fact, it's come out, hasn't it? I've talked through it. Let's have a look what the markets has done. So let's have a look. The euro, I would guess it's not, by the looks of things, euro dollar. So euro's been down in daily. I don't know how that was. It'd been. Oh, there we are. Up on that. Obviously, the data's broken. So we were down earlier this morning. It's very much sideways action though, around that 117 area we've been talking about. 117.63 we're up at the moment. So if we come back to the 5-minute time frame, there we go. A big boost for euro against the dollar. So a weaker dollar on the ADP number. So I'm sure some of you already know what that number is. I haven't updated this site, so it's take me all the way back to today. So ADP has come in at today. Oh, it's gone back to stuff I didn't want. A contraction. So the private payrolls have actually lost jobs, 32,000. That is going to shake things up quite significantly. So a decline, regardless of how disconnected we think ADP is from the Bureau of Labour Statistics, that's a decline. And the other thing that's really going to shock markets is that revision from last month. So last month, it was around about the non-farm payroll number, which was expected around 55. It came in at 22 non-farm payroll. ADP last month was at 54. It's been revised down to negative, to a contraction of 3,000 jobs from a growth of 45,000 jobs, 54,000 jobs. That is a significant revision in anybody's books. So hence the weaken move for the dollar's weakened quite significantly on that. So it's very unexpected, big surprise. Markets hate surprises. A contraction for ADP. I'm just going to put on an internet feed. I've got some news flows here. I've got CNBC and Bloomberg here. That'll be whizzing across the screens, I'm sure, on that. So we'll watch that now. So that's quite a significant surprise. Understandably, the long end of the yield curve has dropped significantly. We're at 46968. So looks like chances of rate cuts will be increasing quite significantly on that, and hence the weakening dollar. That's quite a significant move. Obviously, it's only the 5-minute candle, but that's a significant move and a rebranding of that. We'll look at the FOMC expectations from excuse me, from the Market Watch tool in a minute. I won't bring it up now. We'll bring it up later. We'll have a look at it later with a chance to update. Okay, so dollar weakened on that. We could only expect gold to have, which we were looking at, weren't we, to have moved higher on that. That's the gold chart. And as I always say, guys, if there's any particular asset you want to have a look at, let me know. Let me know. Oh, sorry, I missed all these. Jatin's gone through. There we are. Prop 2 is our favourite prop and first choice whenever we recommend it. Thank you very much, Jatin. I'll leave that up there, actually. Chat on. Anish, we are going. Katine saying best prop firm. Well, thank you very much. We do our best, my friends. So interestingly, though, gold didn't move as much as the dollar euro did it? It's up again, but we're down. You can expect perhaps new all-time highs, 3895 this morning, around 920 here in London. To perhaps be tested on that weaker than expected ADP. No, it hasn't happened immediately anyway. But if you're looking, if you're trading gold today, that's the line in the sand everybody's got to so far today. I would argue that data was sufficient to perhaps retest that later on in the day. But anyway, see what happens. Here, 5-minute using this strategy. It ticked along there. This 5-minute strategy. We used the cross of the stochastic. My stochastic for this strategy, guys, is a mean reverting strategy. So I, thanks to, as I said, most times, not every time I show people this. This is from a mentor. I'm going to call him mentor, but he probably is a mentor of mine. A guy called Trevor Neal, who came up with this strategy for the stochastics. The 10, the 6, and the 3. 10, 6, 3 for your stochastic setting. And we're looking for a cross of the K and the D lines here and see on the 5-minute. Happened there. And you use the Bollinger Bands, standard setting for the Bollinger Bands, 20 count back, 2 standard deviations, so 22 for your Bollinger Band. And what you're looking for a reversion. You're looking for a reversion from either the upper or the lower Bollinger Band. So, and we use the Bollinger Band first, and then the stochastic. So here you can see the stochastic has crossed, the K and the D line have crossed down here. But we hadn't touched the outside of the upper Bollinger Band until at this point here, and there we go. You can see there at 9:20. That was the not the last touch, but that was when the Bollinger Bands sorry, they finally crossed back down there. So you'd have been short there at 9.25 on this strategy, even though you can see that, we first touched the outer Bollinger Band. We were looking to go short there. We'd have had actually, you would have had a short position there as well, which wouldn't have played out. You can see how that's crossed down. We're still in the overbought area, so be a bit careful about that, because the trend can outdo the mean reverting situation. Getting in, so that didn't happen. So you would have been short on this calendar there, and then stop loss would have been up here somewhere, and it stopped you out there. So you're looking to go. In fact, it's gone long then. So you might have taken it long, but that's the wrong way around to run this strategy. That's the next short. So you're on short there. That would have been your target here, but you could have been out there as that's recrossed there and then got in there. And then the second target would have been there when it's gone to the second half, the other half of the Bollinger Band. That's crossed again down. So you're looking to run that down short. Then we've touched the outside of the Bollinger Band. So we're looking to go up, but the stochastic lines haven't crossed until this point here. The actual cross happened there, but we didn't show on the chart till the following candle. So you'd have been long there. First target would have been there, and second target there. You are now out. You're now looking to go short. You've gone short there and out there on the touch of the outer Bollinger Band. So you made a little profit. Or what you could do now, looking at this is turned and this is a big down candle, is perhaps to keep this open, because you see the Bollinger Bands have moved down. We've had a bit of a squeeze here earlier on at 11.50. We had a big negative down candle confirming our entry, and then because it took some of the profit off there as it's touched the Bollinger Band. But now we're looking potentially for this to then reverse and go back up. But as you can see, as you saw here, this when it touches the outer of the Bollinger Band, it can run and run and run. It can cling to the outer of the Bollinger Band, and that's what might happen now for gold. So we might be going short here, just purely based on the technicalities of these two indicators. So here on the 5-minute chart, gold is actually went from long to short very quickly. Successful long trade from 12:45, 15 minutes ahead of the data, and out there. Final close there. Reverse here at 13.20. And so I say we've got a short there at 388, and we're in the money. Again, you've got to take some of your profit off there. It's 388. It's a little move, isn't it? It's like $1 and a bit, but it's still profit following the rules. So let's see. I'd sit with that now, and I probably have my stop loss around about the midpoint of the Bollinger Band and see what happens with that. But so that strategy there for gold is short. So guys, Keaton, Jatin, anyone, Ashwin, if you're still here, Ashish, X7, whoever you are, hello X7, nice logo, I like that. I'll put Katin's up because Katin said we're the best firm. Jatin here, he was long euro, but he was closed it before the news. Very good. I hope you're in profit. If not, it's just one of those things that comes out. It's good to be out for the news, see what happens, because it was a big surprise. We should go back to the euro. It's given some of it back, hasn't it, following the news, but the downtrend here on the 5-minute has been reversed. The 15-minute trade today was very choppy, wasn't it? It was with all that PMI data in Europe. So we've been topped out this morning. It's 8 o'clock. Interesting. There you go. We when we talk about when we trade the open of the European session, that's obviously 8 o'clock, and that's where the euro, interestingly, has put its high of the day to the downside. So again, that would have crossed there, been short there, but it's going to get you. It's massive. You would have re-entered on that. Oh no, that's because we've touched down here, so it's gone short there, but again it stopped you out on the volatility. Down. Last move here for the euro was, as we said earlier, was the cross there. So again, using it's the 15-minute chart now. With this strategy, would have gone long here. Stop loss would have been down here, below the low of the day. Rallied up, didn't quite get to first target, didn't get to the midpoint of the Bollinger Band ahead of the news. So What were you saying, Jettin? You were saying you were long, so hopefully you were long here and got out and made some pips. This strategy would have still been long into the news, but the stop loss might have been pulled up. It's probably been by this candle here, 12:45. The stop loss might have been here. It might have been. It certainly would have been there, and it would probably been stopped out on that. So it would have been a small loss. But then, massive move and wait for the news to calm down and fade the news now. So we've had a big move up. As we saw immediately after the data. But as I said it before, interesting, we didn't get to the high of the day. We got to 117.68, just like gold didn't get to its high of the day. Neither has the euro. So the dollar hasn't weakened enough, even on that very significant weak ADP number currently for it to take out the high of the day. So that if you're long this strategy, which this system would have been, but it would have stopped you out because of the volatility in the news. But the bias is still to the upside because we're in the upper half of the Bollinger Band. The stochastics are still rising, although we've poked into the overbought area. Remember, everything over 80 is deemed a technical overbought area, but we like to wait for the cross of the two lines, and add on a break down out of the overbought or a break out up above the oversold areas, so you can add again at these positions. But at the moment, I say this is still up. It's a bit indifferent. We're still trying to fade that news on this time frame, the 15-minute. We go down a time frame or two, down to 5 minutes. You can see it's still bid, it's still up to the upside. It's just crossed there. So that's no, it's not long because it's crossed to the upside, but it's been short from there, from that touch there. So that's gone down, 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 and you've got that's not worked either. That's taking you out in the 5 minutes. So that's what you'd be looking for if you long this to the upside. It looks like we may be moving higher, so that might be a tentative entry on the cross of the stochastics there at 17.50 So that would have been a very tentative long position there at 13 completion of the 13:25 candle. That's gone positive now for a move to the upside here potentially, but obviously it's within it's at the relative sort of balance area around about 50 where that's crossed. So yeah, dollar remains weakened following that data. So let's just go back to the calendar. If you're just joining us, you can see non-farm payroll, ADP, non-farm payroll change, a contraction of jobs of 32,000 jobs, and previously it was expected to increase by 52,000. So the variance is over 80,000, 84,000 worse than expected, and also significant that the fact that last month was also a decline from a expansion of around 52,000, I think it was, no, 54,000 from last month has actually been a revised lower by 3,000. So there'll be some argument about the validity of the data, but this is a private company, it's not a federal company, so that can't be part of Trump's beating around the bush. So Justin said he got out at the top of the green candles on that euro trade. Very good. Booked at 117.36. So nice one, my friend. Well done. Well done, my friend. And you're a winner in our Wheel of Fortune today. So you're having a good day, 1st of October, my friend. That's two winning moves. Don't push your luck, but try a third. Things come in three, don't they? So congratulations, Jatin. Well done. Yeah, well done, my friend. So yeah, euro still pushing higher. So I said I'd perhaps bought it here at 17.50, and we're at 17.6. Is on 10 pips or 10 points to the good at the moment. But anyway, let me have a quick sip of water. We'll see what's going on. So what does that mean for? What could that mean for non-farm payroll on Friday, if indeed it's actually taking place? I've not heard anything to say otherwise, but that's 32,000, quite a significant decline. Right, okay, so the shutdown jobs numbers can't be measured for October. October CPI can't be measured. If shutdown goes beyond the long-term threat, obviously that's CPI into November as well. So it looks like Friday's payrolls are actually happening by the looks of things. I'm not sure. I'll wait and I'll let you know. I say on the Discord group, but there'll be general news if there is actually a not happening ADP happening on Friday. We'll also let you know beforehand. So elsewhere, I know you're all big crypto fans. We had that big move up through the key 112,000 yesterday. On open 116,000. The weaker dollar has lifted Billy Bitcoin yet again. Here's the day this morning. It's a big old strong day today. That's the last move up. That's a 5 minute. Let's see a positive candle here this morning again. So don't know what's caused that. It doesn't really matter, does it? You just trade what you see, and that's a big strong candle. Big strong candles yesterday at the not yesterday, it was the day before yesterday, wasn't it? At the open in the US, and yesterday was quite a strong evening move as well, consolidating here in the Europeans in the Asian session, and then a big lift in the early European session this morning. So Bitcoin continues to make gains from that strong base we'd seen on our 4-hour chart down here at that 109,000 level where we went sideways quite significantly. So there's a big move here and a nice move. So leg retrace, leg higher, new highs this morning here on the 4-hour. So you look to the left, we're into a bit of a restriction zone, but it's not significant. Next level takes to 117,500, so still $1,000 you could argue on that chart there on the 4-hour chart. Beyond that, there's a bit of fresh air, so that's also a resistance area. So 117,500 is the next key resistance area for this move higher. But as you can see there on that 4-hour chart, it's a good strong move to the upside, following a few strong legs to the downside, and that's base forming at 109,000. The key thing for me, as I've said all along, is that we're through the key 112,000 here on the 4-hour chart. The 20 period moving average is now above the 112,000 key level at 113,000. So a good move for Bitcoin. Up on the daily time frame, you can see the significance of the floor last week and the move up we've seen this week there on Monday, Tuesday, and today's Wednesdays. We're breaking away from that key 20-day moving average at 113,800. So the breach on Tuesday was confirmed yesterday. Although we traded under the 20-day moving average, we closed above it and above Monday's close, and then we've moved higher again today. So you can see that 117,500 is our next resistance zone for Bitcoin. Now we got the top of the Bollinger Band at 119,000, and then this all-time high that took us to 124,000 back in the middle of August. As you can see for Bitcoin, oil continues to wither. We saw that. I didn't mention it on the calendar, but we saw the inventories from yesterday. We go back to yesterday OPEC meeting. Still talking about production increases. So back to yesterday. Filters. Two. Apply it. Sorry. So yesterday's oil private inventories. The API, a big decline, not as big as last week, but still a significant decline, 3.7 million barrels in ADP. And remember that 62, we talked about it yesterday, didn't we, in a bit depth, the $62 floor is now being tested again, at the bottom of the channel that we've been in for most of the summer. You can see this is all of August, all of September. The top at 65, sorry, on WTI, but we're at the bottom of the floor now, bottom of the channel now. So we've bought it during the summer, but now we're into October. We may see some there may be some more weaknesses. There's a sign. It's a bit too early to tell, but there's a bit of a widening potential of the Bollinger Band. Might be a bit of volatility. Some relatively big candles of the last week or so. The biggest being on Monday's decline, following the peak on Saturday on Friday. So yeah, 62 needs to hold, otherwise we could drop significantly up to 60 and then to 50, 58, 56 zone that we saw at the end of the spring in May. But also we could continue to go sideways. So it's not really a trend followers market at the moment, looking for a break of that. But as we said, longer things go sideways, the bigger the break can be when it comes. Patience is key. Similarly with the Brent markets. Interestingly, my end of day strategy yesterday triggered. I didn't take it. Triggered a. I didn't actually look at it, to be honest. The oil market doesn't come up very often, but it triggered. I still scan them. Yesterday's. Yeah, triggered on both Brent and WTI yesterday as a short. In fact, it wasn't yesterday. It was that was Monday. Oh no, so it's 2 days. So it's Monday. I got a short. No, it was yesterday, 30th. Yeah, I got a short trigger on the Brent commodity and also on WTI. Both of them triggered short, and they're both in the money obviously today because we're down from yesterday. So there, I missed that one. Down into the bottom of the channel with a target of 65 on Brent, and where's US oil? US oil. It's got a target of it's got a target of 61.25. We're trading at 61.77 on my particular oil platform that I trade oil on. It's different to the one here on the trade lock. It's a bit lower. This is 62. I've got a current price of 61. No, where am I? I haven't actually got prices in. Yeah, 61.70 on my platform. So obviously different liquidity provider. So anyway, yeah, oil continues to weaken. We got the official inventories today from the private inventories yesterday. Later on today, we'll just finish the oil story. 1.5 million barrel build for the official EIA inventories down at Cushing. Tonight, we'll see what that looks like, given that there's a decline in the API numbers tomorrow. So that could, yesterday, so that could be a decline as well. Still some key PMIs to come as well. The S&P and the ISM manufacturing PMIs to come out of the United States this afternoon. So keep an eye on those. USA doing better than many parts of the world, but still, you can see here the contraction zone. That getting over 50 again will be a big stick for the Trump administration to start waving around. If this declines, we shall see. But the potential, not muted, but the less than significant reactions on the dollar on this contraction of the ADP number may be the market thinking, well, yeah, it's all about keeping these people employed, but this is contraction now. Is this a one-off, or is this the first sign of this sort of sideways we've had, where we've had no expansion or an acceptance of the lack of expansion in the jobs market, but there wasn't any sign of sackings? Could this be the first sign of that? That's those sackings coming along and markets and companies starting to lay people off. So big question, and therefore one would expect we'll finish with this now. The Fed Watch 2, the expectations of rate cuts this year to have increased. So the October number has gone back to 99 from where were we? 96 yesterday, 91 a week ago. A month ago, it was 48% chance of a 25, as it was a 50 basis point cut from when it was there, but nailed on now. Still 6 weeks away. Sorry, not 6 weeks away, 4 weeks away. The 28th of October rate cut 99% chance, and a 1% chance of a jumbo 50 basis points cut. If we cycle forward to December, the market, let's say, is still pricing this in, but this is much higher now. 89% chance of a further 25 basis points cut at the December meeting, up significantly from yesterday at 77%. And again, a month ago, it was only down at 40%. So markets are ramping up expectations of at least 2 rate cuts coming now before the end of the year. Well, they've only got 2 more meetings before the end of the year from the Fed. Obviously, as I say, probably even by this 29th of October meeting, there'll be some clearer indication about who's likely to be the next Fed chair. But remember, as we've got these dates up here, Powell has still got all these meetings to chair. October, December, January, March, April. He doesn't go till May, and he could stay on the board, not as chair, but the contract he has says he could stay on the board until it expires much later in 2027. So he's unlikely to do that. Obviously, there's no precedent for that. But there's no, using the word precedent, there's no president like President Trump, and just Jay Powell could do that just to be difficult. He's not that sort of guy, but he has the potential to do that. So the risk of that is still hanging around there if he wants to face the furore of the president any longer. But it's got very, very personal, didn't it? Trump's criticism of Jay Powell. Anyway, so it looks like we have a nailed-on 50 basis points cut from the Fed before the end of the year. That's all now getting priced into the markets, and we've seen that being cemented not cemented, but sort of anticipated to be stronger. If we just put the dollar in here, you can see expecting a weaker dollar across the board. So here, let's just do the hourly chart for all the major crosses. So you can see the dollar was strengthening here against the Swiss franc, and it's reversed significantly following that data. Dollar yen is at 146.80. Again, another one that's had a good day, but dollar weakening over the last since Friday's top here at close to 150. We're all the way down here at 146.86. Big move down this morning, and again, not as big as the Swissy, but a move lower, and we've gone to 146.60 here on the hourly chart for dollar yen. You can see we haven't been down here since the 17th of October, the last Fed meet where we went to 145.46. Dollar CAD 139.25. Here, less sanguine. Canadians got the issues of their own. The euro we saw at 117.58. Aussie back over 66, 66.20 now. So into test the 66 support area this morning, and we've rallied since then and moved as high as 66.28. Interesting. This has pushed to a new daily high, unlike the euro and the others, but the Aussie has gone to a new daily high following the ADP number. Sterling has recovered back over 135 and has been to 135.20, and again another one that's up to new daily highs. In fact, it created a new daily high before that. So sterling having a better day, quite a significant better day than it has done for a while. Let me have a look at that on the daily time frame. So yes, it's continued to move up from Friday's and Thursday's low at 133.30. We're now at 135.20, and there we are having a break into the upper half of the Bollinger Band and over the key 20-day moving out. Interested to see where that one closes tonight. I'll be watching that quite closely. And finally, the Kiwi 58.25. 3-4 day recovery from the 57.60 floor we'd formed last week from this big strong decline. So dollar weakening across its major competitors across the board. It's been extended. I'll just use the Kiwi as an example. It's been extended with that much weaker than expected contraction in private payrolls of 32,000 jobs have disappeared last month from an expectation of a creation of 52,000. And last month we've lost 3,000 jobs. It was expected when it first reported this last month, that we'd increased jobs by 54,000. So the job shakeout is starting to happen. It'll be really interesting to see what initial claims and the continuing claims look like tomorrow. And also, obviously, the non-farm payroll data on Friday, if indeed these come out at all. Given the government shutdown, depends what I'm sure Trump would not want this data out now and let some of the to be as a distraction. So weak ADP, it's a private number, so they can't influence that in the Federal Bureau of Labor Statistics. So there we go. So I'm going to wrap this up now and go and get myself a cup of tea because my voice is about to go. So I'll just finish with congratulations from us to you, all you guys that have got. There we are. Captain's posted up there. These are our winners from earlier at the top of the hour of our free $10,000 account. The 10 winners. These all had to have opened an account. Or at least one account in September, and these are through and off and running. And keep in touch, guys. Tan, Jatin, thank you for your comments this morning, today here. And Nikhil, yeah, the announcement is done. Jatin's saying he's already received a giveaway account. Bravo, my friend. We do move quickly, don't we? I am quite impressed with us. Nikhil, yeah, we announcement done. It was indeed, my friend. Check the the Discord group, but you should have been here at 1 o'clock when we did it, Nikhil. I don't know if you were with it. It doesn't say Nikhil on there anyway. But as you see, clients from all around the world, congratulations to all of you. Take care, trade carefully, and I'll see you tomorrow for the jobs numbers, if indeed they come out. Obviously, watch the markets, watch that gold market, all-time highs, Bitcoin's positive on the back of the weaker ADP number, and the index is the let's have a look at Nasdaq. Nasdaq is down. There we go. Interesting. It's actually come back up. It was up this morning. It's come down on the I forgot about the 5-minute time frame. You see, that's really interesting. Actually, there's the 1 o'clock. Now the 1 o'clock candles here. So really, the stock markets haven't really been impacted by that jobs number. So interesting. All right, take care, everyone. I'll see you tomorrow. Be good, be safe, and always watch your risk factor, my friends. Take care. Bye-bye.